An important key to investing is to remember that stocks are not lottery tickets. Peter Lynch said that, and he is exactly right. We are not gambling. We are taking the information that's presented to us on these charts. We are using our experience and we are using trend following to go in the right direction, whether that's up or down. Let's jump into these charts today. We see the S&P 500 and the Qs, the NASDAQ 100 are up. We see gold is flat. Bonds are down. Let's jump into this market and see how this week is starting off. Hope you had a great Easter and or Passover. As we look at things on Monday, we see that the S&P 500 is up 0.09%. Now we see a cautionary candle for the first day again. It's the first day of a 5-day candle, so we're not calling anything yet. But we do see a cautionary candle forming. We see that price is not moving above where it had been that prior week on our Heiken Ashi average pace candlesticks. See a bit of a pullback. Has the market topped off? Is everything crashing? Can't say that at all. We see the market's up just a little bit, but we do see a bit of a slowdown this first day of this weekly candle. We'll get into things a little more as we drill down. We see the price percent oscillator losing a little bit of its upward momentum. The derivative oscillator might be losing a little bit too. At least it looks like it is flat. So again, price is just above the weekly trend line. So that's good. Now we go from the weekly to the 2-day on the S&P 500. That's where we see that we are now below the 2-day trend line. We're still above the weekly, but below the 2-day, and it looks like the 2-day is trying to get close to crossing over, going down. Hasn't happened yet. Now remember that this is a drawn 2-day candle. It reflects both Friday and Monday. It shows us a doji, that's indecision tending down. That's followed by a red spinning top, indecision tending down. So this lots more indecision. Derivative oscillator's losing momentum. Price percent oscillator is losing momentum. So keep an eye on things. That 2-day chart might be crossing over, which again would be potentially pulling you out of any up trades you might be in on the S&P 500. Of course, one thing that we've not had is a trigger pull for us. If you got in, you would have to have gotten in quite a ways before, because as you recall, we've never had things cross over to give us a trigger here lately after this latest up push. Not saying that somebody might have been in on a long-term weekly trade, but as far as what we've been following lately, we've just not had enough energy to pull a trigger for us. And we use the 4-hour chart, of course, as our trigger chart to get into a trade, and that hasn't happened. We see some down moves in the morning, some up moves in the afternoon. Prices just above on the 4-hour chart, just above the 2-day trend line. Now, maybe things will pop up strong on Tuesday and give you a jumping in point. Haven't had a crossover yet on the 2-day chart. If this 4-hour chart does cross over going up, then of course, before the 2-day crosses over going down, then of course it can give you a jumping in point. But we've really seen a sideways slide here going on several days now. So we'll continue to watch, wait, and see what we see. We head from the S&P 500 to the Qs, as we affectionately call it. The NASDAQ 100 is what this chart represents, the tech stocks. And we see that they're continuing to move up. We've got an up move first day of the latest 5-day or weekly candle. Looks like the price percent oscillator, again's lost a little momentum, but still heading up quite nicely. Derivative oscillator looks like it's flat. First day of this latest 5-day candle. 2-day chart, I'm going to have to bring that down a little bit still. Well, it looks like it's about flat. Derivative oscillator is losing a little bit of momentum, but we look at the Heiken Ashi candlesticks, and we can see that they're continuing to push higher. Prices above the 2-day quite nicely. We get just a beautiful trend here, and well above the weekly 2-day, the weekly trend line. So above the 2-day and the weekly, things are looking nice there. And then we go to the 4-hour. We see a little indecision in the morning and a pop up nicely in the afternoon, looking quite nice. Again, for those of you who have been in this trade, you've noticed that here for many, many days, we've been negative on the 4-hour chart when it comes to the price percent oscillator, but we've still been in this trade. Why? Because, of course, once we pulled the trigger way back on the afternoon of the 1st, April Fool's Day, we then, of course, always revert to our 2-day and our weekly charts, which are continuing to move along quite nicely. Things keep appreciating quite beautifully. So we'll stay in as long as the charts allow us to stay in. We cannot force the charts. The charts lead us, but they have led us quite nicely. Somewhere a jumping in point around 180, and of course as high throughout the day as 188.86. That's quite beautiful. So again, that's how beautiful trends are when they work. The trend is your friend until the end. Let's keep pushing through these charts. This trade is still underway on the Qs and has been a nice profitable one so far. You can pull your profit at any time. Now, let's keep moving. We go to 20-year bonds, appear to be going into their 3rd week of down movement. We have a red candle forming. Might have a weekly vertical crossover by the end of the week, maybe. Derivative oscillator is negative. Remember, we never call a candle till it is fully drawn, and that won't be until the close of the market on Friday. We'll let you know if there's a weekly vertical crossover. If you've not signed up for and aren't receiving our texting service, you can do that for free. How to do that is in the show notes. If you live overseas, I'm sorry, that is only available to our U.S. friends. But if you simply listen to the comprehensive review and forecast that's recorded after the market closes on Friday over the weekends, you'll know about any and all vertical crossovers. That is the key element that we use here for showing us big changes in trends and opening up trading and or investing opportunities for us to practice trade. Okay, we see now that the weekly chart looks like it's going again down for a 3rd week so far. The first day of this latest 5-day candle down 0.48% for the day. We go to the 2-day chart. This latest 2-day candle is also a down candle, although it's really broken through the 2-day trend line. We'll have to redraw that at some point. Derivative oscillator gaining downward momentum. That price percent oscillator is kinked over, going down at a steeper angle. And then we go from the 2-day to the 4-hour. We can see how things had tracked up for a day on Friday and then down. Price movement is below that 2-day trend line, and we can see the 2-day price percent oscillator trying to move away from the red signal line, even though the derivative oscillator is positive. So we'll wait and see how bonds sort themselves out for the week. Gold, as we said at the beginning of the program, is flat. $120.37 is where it closed. Looks like we're forming a new week, starting off with a lower low, heading down. And we see the derivative oscillator gaining downward momentum, price percent oscillator moving down. That's a nice candle to see, to continue to follow the trend that we've seen after we had that weekly vertical crossover going down on the week ending the 29th of March. So again, we'll continue to watch and see what we see. We go to the 2-day chart, and we can see a bit of a green up candle for this latest 2-day candle. Are things going to bottom out on us again? Don't really know. Looks like things hit somewhere around the 120.20 mark, something like that. And again, at the close of the day, 120.37. So we do have a green 2-day candle. Price percent oscillators heading down. Derivative oscillators still going down. Price movement still decently below the 2-day trend line. And of course, we take a look at that 4-hour chart, and what do we see? Again, looks like we're getting a hard bottom forming around that 120.20 mark, something like that. So again, that's been going on for 1, 2, 3, 4 days now. So is it going to pound on that and push through, or is it going to bounce off of it? If you're in an inverse trade, then of course keep your eye on the prize. We will see what we see there, and if indeed that's going to be a hard bottom and things are going to move off of it and maybe pound it again, we'll just continue to watch. Derivative oscillators losing momentum. Price percent oscillator is heading up at the end of the day on that 4-hour chart. But again, keep in mind that 2-day chart's continuing to show some strength, moving down And that weekly chart is is again in a pushing down pattern. So we'll continue to watch and see what we see on gold. That is where we are as we end the first day of the week after the Good Friday holiday. And we appreciate you being with us. We'll continue to review these charts every day. If you've not purchased our book, we have our 9th printing in here at the Charting Wealth offices. We've been filling orders this afternoon. If you don't have the book, we'll fill one for you. We'll actually send you an autographed copy of the book with a nice little note that I hand sign for everyone, and we'll ship it wherever you need it. If you happen to be in other places in the world, please go ahead and just email us, cw@chartingwealth.com. We'll have to send you a PayPal invoice. Squared doesn't allow us, that is our processor for our credit cards. For some reason, we can't do overseas orders with them. But those of you in the States, of course, just look in the show notes. You'll see the link to purchase the book. We appreciate all of our Patreon supporters. Lots of good stuff for Patreon members. That includes all sorts of extra training and, of course, the monthly Q&A, chart reviews, all sorts of stuff. Folks, we appreciate you. We know you appreciate us. You send us so many nice notes. It just makes it worth it here every day. And, of course, game day is coming. Just heard an impressive interview with Jim Rogers. Those of you who've been around investing a while know who he is, former partner of George Soros. Incredible investor, lives in Singapore now. And he said on the interview I heard that he really expects there to be some bad things happening in the market in the next year or so, sooner, absolutely no more than 2 years in the future. But that's why we are training so hard. That's why we are pushing you to commit yourself to spending 10 to 15 minutes a day in the market every day to learn what's going on so that when the bottom drops out, you are ready. Because when everyone else is running around with their hair on fire, screaming, throwing themselves out of buildings, God forbid, you are sitting there ready. You are prepared. You know what you're going to do, and you can read a stock chart. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.